Okay, let's get started. Thank you everyone for joining us this morning in our third digital roundtable. We're really excited to be able to bring you this content up to the minute as quickly as we can as a resource to you, our clients, and our friends and partners. We're really excited for today's session. It's been a conversation we've been having with all of you over the past couple of weeks. We have two incredible individuals with us, and I'll introduce them in a moment. And we're going to be talking about the economic stimulus plan and understanding the package and how you and your organizations can benefit from that. For those of you who don't know me, my name is Bailey Roth. I am the president and co-founder of Redstone. My business partner Carly is on the line as well, and we're here to answer any questions and to continue helping everyone navigate through this time. We're going to jump right in. We'll introduce our panelists. I mentioned it before. We have a tight schedule today, a tight program, so we're going to jump right in. We're going to go right through all the questions and all the introductions. If you have any questions that you have not had the opportunity to ask, please feel free to use the Zoom chat feature. At the bottom, you'll see the chat function. You can send a message to me directly, and I can sort of make sure we tie it into the discussion if time permits. Everyone's been muted. I may call on people to ask their own questions, but we might just plow through the questions. The panelists have received most of them already, and we do want to make sure we get to all of them in the 40 minutes that we have together. So let me jump right in with introductions. We have Suki and David with us today. So Suki Dulay is a pension and benefits lawyer in Hicks Morley's Toronto office. She assists clients with ongoing pension plan administration and governance, as well as plan mergers, corporate transactions, and member communications. She also has experience advising on tax and employment issues related to compensation and benefits, which is why we're excited to have Suki here with us this morning to talk about the wage subsidies, EI, and other stimulus plans to address your companies, but also the individual. We have David Posner with us. David joined Zeifmans in 2006 and became a partner in 2016. During that time, he's amassed a wealth of knowledge and experience in Canadian taxation in many industries with a primary focus on real estate. David is skilled at crafting results-oriented solutions while being as creative as possible to maximize the benefit to the client. We are so lucky to have David with us this morning to help us understand the stimulus announcements around loans, flexibility with taxes and payment deadlines, and so much more. Thank you both for being with us this morning. We're going to jump right in. I'm going to pass David the virtual microphone to kick us off, and going to share some thoughts with us on everything I just mentioned. David, take it away.
Okay, good. Can you hear me? Am I? You can all hear me? Okay, awesome. Hi guys. So good morning. Before I start, I just want to let you know that, and I'm sure you know this anyways, but these laws are changing daily, and things that we think would be the case with these packages last week, CRA or the government puts out information and it's very vague, it's unclear, and we think that we understand it one way. We'll advise clients, it looks like you don't qualify one day, and then the next day they come out again and it's changed. So I just want to be very clear that a lot of what I'm going to say is vague. This is what we know now. Things could always change. They might completely change, and you should just keep up with these changes, or try to, and if you have any questions, you can always call us, or I just make sure that you're on top of things, because things always change. So the first thing that I want to talk about is a loan, the $40,000 loan. And from what we understand right now, any company or a nonprofit that had employees on the books in 2019 and their salaries paid were between $50K and $1 million, you should qualify. It doesn't matter if revenues have gone up, if revenues have gone down, if you need it. It seems to be the way they've kind of explained it is that you should qualify. The only issue is you have to have issued T4s. So I would usually if someone has somebody on salary, they issue T4s. Some companies don't. That's wrong, but that's not really important right now. But the way they're explaining it is that you just have to call up the bank. So as long as you have a relationship with a bank, and I believe you had to have a relationship with any particular bank before March 1st, you should qualify for it. It doesn't happen through CRA. You don't call CRA, you don't call up the accountant, you just call up, the bank. And the way they're making it sound is you just show them that you prove to them that you had salaries on the books, you're a good. Now, there's a whole bunch of questions that can come up, and clients are asking, well, what happened if I have, companies A and B, and I paid all of my employees through company A in 2019, and now in 2020, I'm paying all of my employees through B. These are all great questions, and we're hoping to get more clarification on that. But we do know now that nonprofits, not-for-profits, and companies should qualify for that, and it's not based on much. BDC, the BDC also has a loans. They really put out very, very little right now. It's not really clear who qualifies for them, but we do know that if somebody does qualify, they could get up to $6 million. But we're waiting for more information on that. So, but just know that you might be able to qualify for that, but I don't think it's worth talking about that now, just because there's not, much out there. Taxes, though, there is. So if your company has HST to pay, typically speaking, HST, you might be paying it quarterly. You might have it had to do in March or April or May. All that HST and the filing, so not just the payments, but the filing, that's been pushed off to June 30th. So it will help with cash flow. Even if you have to pay it, you don't have to pay it right now. The payment isn't waived, so don't think that you don't ever have to pay. That's a very important thing. Some people think that the HST payment is waived. It's not waived. It is, pushed off. So for any of you, let's say that have HST quarterly filings, and you would have had to make a payment, let's say by April 30th, that's now been pushed off to June 30th. Personal taxes is something, typically speaking, personal taxes are due April 30th. That's now been pushed off to June 1st. Self-employment people, they still have to file by June 15th. However, payments on all personal income taxes, even though the filing deadline hasn't changed, the filing deadlines have changed, but the payment is actually not due till August 31st. So even if you file and you owe money, you don't have to pay it till August 31st. I believe, just based on talking with accountants and lawyers now, that this deadlines will be pushed off, more, because this whole COVID issue is lasting much longer than we thought or anybody thought. So this is what we know right now, but it would not surprise me if this gets pushed off further. So just know what the actual deadlines are now, but this could be pushed off. The last thing I just want to touch on briefly is that there's something called CRA fairness, and a lot of people really don't know what that is. But fairness is that if somebody owes taxes and they pay late, and there's interest and penalties because they pay late, there is a mechanism with CRA where you can go to them and say, listen, there is a reason that I filed. Maybe they were not well, they were having family issues, and you could apply to them to ask them to waive or to reduce the interest or penalties. They won't waive the tax, but this is really not something that the government has been talking about now. This program has always been there. So if you feel like any of the relief that's currently being offered doesn't apply to you, or you can't take advantage of it because you don't qualify for it, it's something to consider going to this program after the fact. So you would have to file, you reassess the interest, the penalties, and then you pay it or you don't pay it, and then you apply to CRA to waive it. And COVID, I think, is a very good reason that they would. There's never promises or guarantees that they will, but you should just know that if things don't apply to you, and you think you're going to get dinged or hit up with interest and penalties, after the fact, this is a great way to go to them and say, listen, this wasn't, my fault. I had, circumstances beyond my control, and please waive. And I found that they often do, as long as your reason makes sense and you can kind of prove it, they often waive it. So I think my time is done.
David, I had one question for you on
Sure.
the K financial institutions loan.
Yeah.
This has been something we've been advising and recommending to our clients that have payroll, because my understanding is that there will be $10,000 of that forgiven. Can you touch on that a little
Yes.
bit?
Yes, I should have talked about that. Yeah, sorry. So the way it works
That's
is that
okay.
when this 40K, okay, when this 40K loan comes out, that's interest free. So it's interest free as long as you get the loan. It's interest free for 2020, 2021, and 2022. If you can't pay the loan back by the end of 2022, what they're saying is the loan will start to accrue interest at 5%. And I'm not sure when you have to pay it back by, but there will be a 5% interest you have to pay. The good news is what they're saying, and that's what they're saying now, is if this loan is paid back, or at least $30,000 is repaid from this loan by December 2022, they will forgive $10,000 of the loan. So really so what that means really is you get 40K now. If you repay 30K by December 2022, you actually get to keep 10, which is great. For those of you that pay taxes, I mean, many non-for-profits don't pay taxes, but if you are a company that is taxable, that $10,000 forgiveness of loan will be taxed. That's considered loan income to your company. So you just keep that in mind. But this is really the best. I think this is a great one because it shouldn't be too hard to qualify for it.
Okay, thank you so much, David. I'm going to pass the mic to Suki now, who's going to touch a little bit more on some work sharing, wage subsidy programs, as well as the CRB and any other EI employment related benefits. Suki, over to you.
Thanks, Bailey. So I'm going to actually start with the Canada Emergency Response Benefit, the CERB, or I just start calling it CRB. I apologize if that's confusing. The CRB it's now confirmed that it is temporarily replacing EI, regular and sickness benefits for claims that arise on or after March 15, 2020. The application just went live this Monday, April 6th. And for those people who had applied for EI because they had a claim on or after March 15, 2020, they are automatically going to be processed through the CERB system. So the CERB is a little bit different than EI benefits because it's going to be a flat benefit, $2,000 for 4-week period until October 3rd. And so what it provides is $500 a week up to a maximum of 16 weeks. So you can have 4 CERB periods. To qualify in the initial 4-week period, you must experience 14 consecutive days without any employment income. And for subsequent 4-week periods, you have to have no expected income. Now, we do have ERB legislation that came out about 2 weeks ago. However, what we don't have is the regulations to this legislation that will hopefully clarify what they mean exactly by employment income. The CERB is also easier to qualify for than EI benefits. EI benefits require that you had between about 450 to 700 hours of insurable hours before you apply, depending on where you live. The CERB only requires that you have $5,000 worth of income in the last 52 weeks. And it also covers people who have income from self-employment. And it also includes the income that you receive from EI, maternity, or parental benefits. So if somebody has recently gone off their parental leave and was receiving EI benefits and then come back to work and are laid off, they likely will qualify for the CRB, where in normal circumstances they might not qualify for EI benefits. So the focus for the CRB is on people who have stopped working because of the COVID-19 epidemic. It also captures parents who cannot work any longer because they have no childcare options because of the pandemic. The one thing that it will not include, as we know right now, is those who cannot find a job because of the pandemic. So that would capture a lot of students who are going to be graduating this spring, because unless they stop working because of the COVID-19 pandemic, they won't be able to get onto the CERB just because they cannot locate. I think one of the questions that we had gotten before the webinar was whether the CERB can be topped up by employers in the same way that EI benefits can. Right now, we don't know the answer to this, but it is on a lot of employers' minds. Some employers have started registering plans with Service Canada to top up EI benefits or the CERB if that's allowed. But right now, those programs cannot be administered because you don't want to be paying people a top-up benefit before finalizing or finding out for sure whether that will affect their CERB benefit. The second thing that I wanted to focus on newly released wage subsidy programs. So there is an earlier announced 10% wage subsidy for small businesses, not-for-profits, and registered charities. The one that's gotten certainly a lot more buzz is the one that was announced last week, which is the Canada Emergency Wage Subsidy, which provides 75% wage subsidy on regular wages up to a maximum of $847 a week. For the second wage subsidy that provides the greater subsidy, what we know right now is that it's expected to apply to all employers experiencing a 30% reduction in revenue for the months of March, April, and May when you compare that to revenues in 2019. Now, I know that there's a lot of questions about what does revenue mean for a not-for-profit. And the government actually got ahead of this a little bit by saying that they promised to give more information about what that means in the not-for-profit sector. It should also be noticed that right now they've announced there's actually going to be no limit on the number of employees that you can apply on behalf of, other than the maximum limit of $840 per week per employee. So I did want to talk about what has been on the top of employers' minds as a result of this recent announcement. And the biggest thing seems to be that as part of the government's announcement, they said that employers are going to be expected to make their best efforts to top up employees who when you receive the wage subsidy. The way it's expected to work is that employers will pay through payroll the wages of their employees and then receive a reimbursement from the government up to the limits. So a lot of employers have been wondering what their obligations are popping up, especially where they have existing layoffs or where they simply cannot have or cannot afford to do a significant top up. So we don't know what best effort means right now. The government did say that they plan on being flexible with this requirement, but that is certainly something that a lot of employers are starting to consider about what could they afford to do as far as top up. The other thing to keep in mind with this program is that there's no application process currently. It's not expected for another 3 to 6 weeks. So that means that there's still going to be quite a delay until money under this program starts flowing to employers. So employers need to start thinking about whether they can afford to keep employees on payroll and then retroactively receive the money from the government. The last thing I wanted to mention, and it goes to David's point as well, is that this program is expected to change for its final. And that is because it does require legislation to implement, and Parliament has not yet been formally recalled to implement it. We understand from recent news reporting that the opposition parties are working with the federal government to make amendments to what has been announced, but we won't unfortunately have any more guidance until they formally release either a new backgrounder program or they release the legislation. So the last thing I wanted to talk about, and I realize I'm a bit over, but I think it answers some of the questions that we got asked previously, is that the EI work sharing program continues to exist even though we've moved to the CRB general, not EI. So this is an existing program that allows employers and employees with Service Canada to agree to reduce hours for employees who will share the hours that are available and then receive EI benefits for the remaining days off. So in the course, the work application can be quite involved for employers together. They have an relief from some of the requirements. So for example, it used to be that you had to submit your application 30 days before you plan the work sharing. They have reduced that down to 10 days. They've also relaxed the requirement to produce the required sales data up front, so you can apply and then provide all the required data thereafter. One of the biggest changes to make the application easier for employees is to waive the requirement to produce a recovery plan about how the employer plans on bringing employers, bringing everybody back to their normal working schedule. And one of the biggest hurdles in a non-unionized environment is getting all of the employees to agree to the work sharing agreement. So that requirement still remains, but procedurally, one of the things that they've made a little bit easier is that at least you don't have to collect everybody's signature in a non-unionized environment. So with the new wage subsidy program, we don't know if the expectation is that all employees who are on the payroll continue group benefits. But for the wage subsidy program, you do need to continue group benefits in order to apply.
Okay, great. And really quickly, Suki, the 10% wage subsidy and the 75% wage subsidy, the 10% seems quite clear at this point, and there's already templates that exist out there, and for all our clients, those are going to be shared with you in the next day or two and with your finance leads. But there are templates that exist to already calculate what you can hold back from your payroll deductions. Can companies still proceed with that 10% wage subsidy before finding out what the 75% is? If we apply to the 10%, is that going to mean we're not able to apply to the 75%? Do we know anything about that yet?
I think our expectation is that you only do one or the other. So most employers will be trying for the 75%. In the backgrounder released by the government, they did say that the 10% is sort of considered a fallback for those who qualify for the 75% one.
Okay, great. Okay, so I'm going to jump, thank you both. I'm going to jump into the questions right away. We received a lot of questions. A lot of them are very, very similar. So to make sure we sort of respond to everything, I've consolidated a lot of them. A question that was asked a few times, again, was about not-for-profits and not-for-profit eligibility. Are nonprofits able to benefit from the resources that have been announced? For example, I see in the group chat, specifically the loan. Can nonprofits apply for the loan? Can they apply for some of the work share? David, can you speak to that?
Yeah, so definitely speaking, the 40K loan, which is the easy one to get, which I guess that's the one that they've put the most information out. Yes, as long as your company, if it's a not-for-profit, as long as you can prove to them that you had payroll in 2019 between 50K and $1 million, you should be good. It's very clear on that, so there's no reason that you shouldn't, as long as you can prove that you have payroll. Now, I want to be clear, payroll and self-employed does not mean the same. So if you paid a contractor and you issued them, which it's called a T4A as opposed to a T4, I don't believe that qualifies because it says payroll, and contractors are not salaried, so I don't believe those would apply. But as long as you had somebody on payroll, as long as it's 50K, it doesn't say if it could be one person making 50K or 7 people combined making 50K. It doesn't specifically carve out any situations that it doesn't apply. So I believe that you should. And even if you think that you don't, like I'm telling clients, why don't you apply anyways? Like because everything is so vague, they might push it through. So you don't really have anything to lose to qualify. So to apply. So if you're not sure, I would say apply. Worst case, they say no.
Okay. That's very interesting. Would co-ops also be eligible for that 40K loan?
If they have salary, they didn't specify that, but if they have, as long as you have the salary, I would try. I don't see why they wouldn't, but they haven't specifically talked about co-ops. They really just said businesses and not for profits. They didn't specifically use the word co-op. But try, by all means, you should go for it.
Right. We have a few questions that came in from some of our clients that are self-employed. If an individual is self-employed, is there anything they should be looking to from the stimulus package? Anything that they could explore further?
Okay, for me, happy to answer. So, if you're self-employed and you have employees, then you probably could. But very often, you're self-employed, you don't have employees. But this, the plan for the two $1,000 a month, that Suki was talking about, you should definitely apply for that. That's definitely there for you. You can try for the loans also, the BDC loans if you qualify, and they haven't specifically carved out self-employment people, so I would take a shot at it. But really for self-employed, the fact that they are deferring the HST payments, if you have HST, and income tax payments, that should help as well. So those really are the ones that I'm seeing. But again, for self-employed, just so you know, if it's talking about 5K, right? 5K of income. I believe that that's net income. So if you collect, revenue of 6K and you have expenses of 2K, that means you're at 4K. And I don't think you would qualify for that, because self-employment doesn't just mean the revenues you bring in, but it's also cost. So if you're in this boat and you might find that you're not there, you might want to start to, if you haven't been filing properly, you haven't been picking up some income on your returns that you should have been, it's not a bad time to start doing it. If it means that you'll kind of work out by paying a bit more tax, there might be some, packages there for you, stimulus for you.
Yeah, I would just add to that is that a lot of self-employed individuals have the question about whether they're allowed to make any income while they're in receipt of the CERB. So the most recent guidance that we have, it is expected that after you have the 14 days of consecutive days where you don't have income, it's expected that you receive employment income thereafter, which is a pretty inflexible system right now, but we expect that there might be more.
Yeah, just on that point, I just had a client I spoke to yesterday, and they, took a job last week. They only had one job, and they made like $100, and I think they were told that they don't qualify for this period just because they earned that income, which is, it's not for me to judge, but it doesn't really sound very fair that they took this small job. But you have to consider, if it's not worth taking a job if it'll kind of set you back, that you would have qualified for this anyways, and now you don't qualify for it. So just keep that in mind before you take on jobs now.
It's interesting. We're seeing some similar things where some of the programs are incentivizing people to not necessarily be, doing what they can to employ themselves or to. So it's very interesting. And I think to both of your points earlier on, we're going to see a lot of changes and a lot of new measures with each of these announcements. So it's sort of, you got to listen to it day by day.
Yeah.
Okay, so I'm going to go back to some of the questions received in advance. I think we touched a little bit on students already. Else you can speak to on students, anything they might be eligible for, anything they should be exploring. A lot of our clients work in the education sector, a lot post-secondary. Students are going to be graduating in the next few weeks, and the market with no jobs. Any advice there?
Unfortunately, not right now. The CRB, they've made it pretty clear that that's not going to really be aimed at university students who didn't stop working because of COVID. It's in general, that program doesn't seem like it's going to be available to those who weren't working but now also can't find work. So they might change that, because I understand that new announcements about the CERB are going to be made. But right now, I don't think that any of the normal CERB or EI benefits or that type of income replacement is going to be available to university students.
Yeah, the CPA Canada yesterday put out a whole thing. They had a bunch of questions for the government, and they went through the subsidy, the payroll subsidy, and the CRB benefit and the loans, and they had a ton of, well, people were writing in with tons of questions about things that either aren't clear or aren't fair. And this is one of the things talking about students. CPA Canada made it very clear to the government that, students, this is not very fair to students. It's just like a timing issue. If this, COVID issue came out in September, as opposed to now, they could have qualified. So, we're hoping that the government, takes a peek at this. I'm sure it's not accountants, writing in, it's lawyers, like in different groups, lobbyers groups, writing in, and hopefully they'll take a peek at this, because things do change all the time. And hopefully some of these issues that people are, bringing up, they see, and they'll change it. Because it's definitely hard for them, because they're just, this COVID thing comes and they spend a couple days writing up laws, and it's impossible to consider every possible scenario or issue that can come. So it's just, we have to hope and have, faith in them that they'll, as these issues get, brought up and they see them, hopefully they'll make changes to them soon.
Right, and it sort of leads in some of the other questions we received, and I'm not even sure if either of you can answer them, but there were a bunch of questions that we got in about programs for research and development, or grants, or if there's any programs either about that are recognizing specific sectors, like announcements for specific sectors, or if there's any advice you have on, if there's people on this call who are in a specific industry and really want to lobby for their members.
No, don't, please.
One thing that I understand a lot of employers are lobbying for is some clarity on whether the CERB can be topped up in the way that EI benefits can, because the CERB was announced about 2 weeks after most people were starting to do layoffs. A lot of employers had already gone down the path of thinking about doing EI top-ups, and now they're a bit stuck because they don't know whether they can top up the CERB. So that is one thing that I think the government is aware of and is listening to employers on. The other, to David's point, is the fact that the CERB seems to be really inflexible for those who earn a little bit of income. And it seems to be creating some disincentives to continue working a little bit where that work is available.
Mm-hmm. David, did you want to add to that?
No, I think she
okay.
got it perfectly. She nailed it.
Okay, great. And I'll also add that Redstone, we're working really closely with CSAE for our association clients, so association and industry specific, on tools that we could share and use for your benefit to lobby your MPs and the MPs around in different members areas across Canada. So we're working on letters, we're working on tools, we're working on all those things on your behalf with the CSAE to ensure that different industries are getting their voice heard and have campaigns in place to ensure that their concerns are being heard. So reach out to myself or Carly at any time if you want to discuss some of those tools that we're putting together, and we're going to be sharing those with you if we haven't already very soon. Looking at the time, we have a few more minutes. We had a question about the wage subsidies and obligations to pay things like employee benefits and I guess other deductions on those wage subsidies. So can you speak to that?
So we have not seen any guidance from the government about what they, so I should back up to say that the wage subsidy program seems to be designed to keep people on their employer payroll and sort of at least on paper, not on layoff. So that in the normal course, we've seen employers continue group benefits where they can do so. It doesn't seem that they're going to release guidance about group benefits specifically about whether it's required or not. The thing that most employers are actually worried about is the indication from them that there's an expectation that you top up the wage subsidy. So if we just take a simple example, the employer is receiving 75% of somebody's normal pay. And what is the obligation for the employer to then top them up to 100% of what they normally would make? And can you do different top-ups for different employees? For example, I think it makes sense that some employers might decide to top up those who are still performing services versus those who don't have anything to do. And then a bigger concern is what parameters is the government going to look at to see if an employer actually did its best to top up its employees. Are they going to look just at cash flow or cash that's on hand? It's not clear. Right now, we do know that the government is saying that they're going to be trusting employers to make the right decisions because they don't seem to have the manpower, makes sense, to do like significant audits of this program. Now that might change in a year or two when this is passed, but they might decide to look back once there's reporting about fraud or something like that. But we do expect to at least get more guidance on the top-up piece and what the expectations are. I'm not sure that their federal government is going to start mandating that group benefits continue. On the EI work sharing program, though, which is also a federal program, they do require that if you apply for that the normal terms of employment continue, including the continuation of group benefits.
Okay, great. Thank you both for that. I'm looking at the time and I want to make sure we're mindful of everyone's time. I wanted to give both of you a chance just to kind of leave the group with like a closing message or closing notes, and then I'll do the same so we have next steps moving forward. So David, any closing thoughts to share with the group?
Yeah, I have just a couple of general things. I mean, number one is if you're not sure about something, and again, no one's sure on a lot of things. Again, like I said before, just try. Like, what do you have to lose? They say no. You know, where you could actually lose out potentially is that if you thought that you qualified for something and they thought that you did too, and then they sent you the money or they gave you the relief and that they want it back. Well, yeah, that could be a problem because the funds, were already spent. So what I would say is if you do ask for some relief, you go to the bank or CRA, as long as you have a nice sheet of paper, your Excel spreadsheet, document exactly what you're doing and why you think you apply for it. So, because what I see all the time that, it's now someone does a certain thing, they think it's right now, and then a couple years pass, they forget everything, and they have to go back, CRA comes in or the bank comes in, and you don't know what you did, or your employee that did it left, and I'm asking you should document everything, make sure everything is there, because you forget what happens. It happens a lot. At the other end is if you know that you definitely do not qualify for like something, so it's black and white that you don't qualify, and you go for it anyways, and you get it, you could get nailed on like fraud, and there's a lot of, you'll have to pay it back. There could be a lot of penalties, and who like knows what could be. So just don't lie. You can make assumptions that make sense. Write down the assumptions as to why they made sense. So this way you can always say, hey, this is why I thought that this is good. But if you do, there's absolutely no way that you qualify for it, don't go for it, because you could spend the money and they can come after you and it could be bad. So that's all I'm saying. Go for it if you're not sure, but say why you think you qualify for it. But if you're out, if your self-employment income was 0, don't apply for it and say that you got $6,000 from someplace, because they could ask you, well, where is it from? And they can go and ask that person who gave it to you. So make assumptions that make sense, but be honest at the same time, because you want to be careful down the road.
Right. Perfect. And Suki, over to you.
I completely agree with what David was saying, the documentation piece specifically, because so much is unknown, even about the CRB now that applications are open, and the wage subsidy in particular, there's a lot of unknowns. It really puts employers between a rock and a hard place as far as planning goes, and thinking about how many of your employees can you keep on payroll while this government money is still being held back. And I think that what you can do is to start planning with the information that you have, accepting the fact that it might change in a couple of days or the details might change. But if you start planning now, you'll be able to document your decisions about why you did that layoff now, what the cash flow situation was, what do you project that you'll be able to do for your employees going forward. Right now, a lot of these subsidies are only going to be in place until June 6th. That might change because things with coronavirus are changing all the time. But if you can start taking some steps to think about what you want to do and what you're able to do based on the information that we do have, and document the thinking, I think that you'll be ahead once we do have final information.
Okay, great. Well, thank you both for your time this morning, and thank you to everyone who joined us as well. We will follow up. Our clients are going to be receiving a template document on the 10% wage subsidy and how to calculate that. If there's anyone on the line who's not on that list, please feel free to email me. We can share it with you as well. Bailey, B-A-I-L-E-Y, at redstoneagency.ca. Perfect. Thank you, Caitlin. Got our contact information up there. So you can reach out to me if you're interested in getting that 10% wage subsidy Excel template on how to calculate that. I'm happy to share it with you. Again, thank you for joining us. We're going to have another session next week with Tim Arnold. More information will follow. Please look out for that. Wishing everyone on the line a very happy Easter, a very happy Passover, and a nice shorter week and long weekend. Stay healthy, and we'll see you all next week.